It's a very interesting part of the market right now. In the first phase is retail, the second phase is institutional and sovereign. So this is a natural part of this move. It's time for the institutions to come in, and that's exactly what's happening. And a lot of people doubt how many of these companies the market can bear, but these are tapping into the $300 trillion bond market. Each one of these companies will do something different. Right now, a lot of people have been attacking MicroStrategy because he's been tapping the ATM too much, which has been depressing the stock price. And Michael Saylor's an idiot. What is he doing? Look at MetaPlanet, it's going up so much. He's screwing all the stockholders. Like, really? He's playing a different game over a different time frame. But when Bitcoin 10x's, MicroStrategy will be up here.
Mark acknowledges that markets always overshoot. Human emotion drives participants to take on too much risk and too much debt. Combine that with the very nature of business, which often incentivizes leveraging up as much as possible, and the stage is set for eventual washouts. But here's the key. Mark does not believe we're anywhere near that stage yet. While risks exist, the current setup is fundamentally different from the dangerous leverage dynamics we saw with Luna or other collapses.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
It's a very interesting part of the market right now, and it's exact. You asked, I'm going to answer that question, but you asked where we are in the cycle, and I said in the first phase is retail, the second phase is institutional and sovereign. So this is a natural part of this move. It's time for the institutions to come in, and that's exactly what's happening. Will there be too many companies and a washout? Yes, of course. Number one, we know human emotion is there, and what humans will do is they'll push things too far, they'll take on too much risk, they'll take on too much debt. Number one, that's humans. Number two, the very nature of the business is to lever up as much as you can. So the nature of the business is leverage, plus humans will take it too far. So of course there will be some that will take it too far, and there will be a big washout. I would say that I don't think we're anywhere near that stage right now for a couple of reasons. Number one, a lot of people doubt how many of these companies the market can bear. A lot of people think that MicroStrategy is going to win the whole thing. There's not going to be room for other people. And I think that's a completely wrong take. If you look at what's happening is people are still, Jeff Booth talks about this all the time, we're trying to understand a new paradigm from the one that we're in today, and it doesn't make sense to us. And so what's happening is you're looking at these new treasury companies with a traditional financial lens, and it doesn't make any sense, and we can't make sense of it. I don't think we'll get to a point where the market gets too saturated. Each one of these companies will do something different. Now, that's a lot different than if some will get into danger, because the very nature is to leverage up the Bitcoin that you have. So you're tapping into public equity markets and public debt markets to lever up the Bitcoin that you have. So I think there's a couple ways that you can look at this. So number one, I had dinner with some people last night, and they were thinking that, yeah, but how much appetite is there for these companies? But they're thinking about it from how much Bitcoin money there is. But these are tapping into the $300 trillion bond market. These are jumping into the $200 trillion equity market. That's where the money's coming from. And so there's an almost endless amount of money coming from that right now. But what we're looking at is, the way that I'm sort of seeing this, is you have these companies using the public debt and equity markets to get the Bitcoin. So they're selling their stock at the market ATM to buy more Bitcoin, or they're borrowing debt, convertible debt, to buy the Bitcoin. But let's just say that people are buying that right now. MetaPlanet's like a 6.8 times MNAV. So it's a multiple, like a PE ratio, right? So maybe they buy at the equity at a 6.8 and it drops to a 3. Well, in US dollar terms, they lost money. But MetaPlanet's Bitcoin per share could go up. So to these Bitcoin companies, they're thinking one Bitcoin is one Bitcoin. So when you're like, but what happens in the next bear market? What bear market? If one Bitcoin is one Bitcoin, there's no bear market. You're still thinking in US dollar terms. So if you had term debt, when that debt is coming to term, then the speculators could attack that and push the MNAV down and try to take the Bitcoin for less than the book value of it. You're absolutely right. But we're not seeing that. So right now, the companies that are in the space right now are taking convertible debt. So it's like non-recourse debt. So the money is not due back by a certain date. It converts over. So for example, it can convert over into equity of the company. So, okay, we're not, okay, now we'll just take equity, right? So it's not that what you've described could be dangerous. And I would imagine some companies will do that. And those companies could get into danger if those conditions happen. But that's not the situation that we have today. Nobody's in that situation right now. All the debt that's happening is either non-recourse debt or convertible debt. And so there is no function where they'll be forced to sell it like that. With the blockchain group, for example, right, they're doing a Bitcoin bond. So you put up the Bitcoin sits in a bond, and then at the strike, you either get the Bitcoin back or you convert it into the equity, like whichever is higher, right? So yeah, you would get the Bitcoin back. Most of like MicroStrategy's debt is not that. You can look at MetaPlanet's debt, and I think their debt to cover ratio is like 10%. So again, to the risks that you've identified, those are real risks. And I do believe some companies will put themselves into that risk. I just don't see that right now. What I would say is, as of right now, we're looking at 15 companies. And in that example, I don't think most of them will go into that. David Bailey said he would. We'll see as we get a little bit further. But ultimately, I mean, they raised money to buy the Bitcoin, so they're not even levered up at this point, right? So sort of like we saw the Smarter Web company, a UK-based company, right? So they just went and they pushed their stock price up. They sold the stock at the market. They bought more Bitcoin, and so they've got way more Bitcoin than they started with. So only Bailey has said that. So we're talking about 12, 15 companies. Will they all start selling the Bitcoin to buy their stock back? We don't know that. There's a lot of questions that we don't know answers to. But certainly we know the short sellers will come out and do that. We do know that this type of a situation will arise. So I would agree with you on that. What we don't know is how big and how severe it will be. I think that the downside will be muted because it's going to be most of a loss in equity and not Bitcoin. So as opposed to what we saw like with Terra Luna, for example, right? They were forced to liquidate the Bitcoin at a discount to defend the peg. But these companies aren't really being forced to defend a peg. I think maybe a couple of them will probably fall into that doom loop. I don't think it'll take down the whole market. And I think overall, it'll be less drawdown. It'll be an equity drawdown, not a Bitcoin drawdown like we saw in the past cycle. But the risk is there. Yeah. I don't have any way to refute that there is not that risk that will be there. We just don't know. As of right now, the number of companies we see in the market, it's not a systemic risk. A year from now, is there gonna be 1,000 that will be? Maybe, but we're not there yet. But what I would say is, number one, even if a company is dedicated to the BPS, over what time frame? Are they thinking in 3-year time frames, 5-year time? So like right now, a lot of people have been attacking MicroStrategy because he's been tapping the ATM too much, which has been depressing the stock price. And Michael Saylor's an idiot. What is he doing? Look at MetaPlanet, it's going up so much. He's screwing all the stockholders. Like, really? He holds most of the MicroStrategy stock. He's the largest shareholder. He's going to be the most wealthy person in the world probably in the next 5 to 10 years. Of course, he wants the price of the stock to go up, but he's playing a different game over a different time frame. So he's like, hey, we're just buying. I mean, he just bought more Bitcoin in one day than MetaPlanet's acquired, in a year and a half or whatever. But when Bitcoin 10x's, MicroStrategy will be up here.
Mark is clear-eyed about the risks. Yes, some companies will eventually take on too much leverage. Yes, short sellers will try to exploit weak balance sheets. And yes, a bear market could expose vulnerabilities. But as of now, with only around 15 companies in this space, the risks are not systemic. Even if a few fail, the broader Bitcoin market is unlikely to face catastrophic drawdowns. Unlike previous cycles, the downside is more likely to be contained to equity losses rather than forced Bitcoin liquidations. Looking ahead, Mark predicts that as the number of Treasury companies grows, possibly hundreds by next year, the risks will rise. But today, the system remains relatively healthy.
So he's playing a game over a different time frame. And the reason why I just bring that up is because back to the BPS, over what time frame? Are they okay to not increase the BPS for the next 12 months, but over a 3-year time frame, the goal is to get the BPS up, for example? And what do I mean by that? So for example, like what Saylor did is Saylor's doing like big purchases at once. But what other companies like MetaPlanet is they're dripping their purchases over time. So they're keeping their MNAV and their days to cover more consistent. And by being more consistent, it allows the stock to move up at a better angle. Whereas MicroStrategy, a lot of people debate, like, would they have been better to not do the big lumps and drip it in over time? But again, he's playing a game over a different time frame. And so back to the BPS, if the goal is to get the BPS up, which yes, it makes sense, but are they okay with letting the BPS drop for the next 12 months? For the next 18 months?
Yeah.
And it would make sense that if you're a Bitcoin company, you believe one Bitcoin's worth one Bitcoin, it would make sense to maybe let that ride out over the bear market, which is why it's important to really have the leadership all the way down to the equity holders in line. I don't know, like I said, the risks that you've outlined are there. How that plays out, we just don't know because it's not there yet. And when I say it's not there yet, we don't have those companies that are in that situation right now. I think that, if we have another drawdown in the middle of next year, which, based off of this global liquidity cycles looks, probably realistic, there will probably be 500 companies in the market at that point. And yeah, some of them are gonna go down. It's hard for, we talked a whole lot about looking at risk, and it's hard for us to understand all the risks because we don't know until we kind of get there, unfortunately. But there are some risks. So let's say, for example, Michael Saylor, everybody was calling for his liquidation in the last bear market.
No, but that was out of ignorance. Because he has no liquidation price.
I know, but what I want to bring up the point is that, but because what he did when he first decided to put Bitcoin or MicroStrategy into this Bitcoin market, he first offered all the shareholders to buy back their stock. He offered all the board members to exit the company, right? And the reason why I just want to bring that point up is it's very important to make sure the leadership of the company and the shareholders are aligned, and that they understand that the goal is to grow the Bitcoin. Because what happens is if you don't have that, then you get into a lot of this thing where like, hey, we need to sell, we need to liquidate, things like that. So back to David Bailey saying he would sell some Bitcoin to get the BPS up. If the leadership and the stockholders are not aligned in that mission, then it can unravel pretty quickly.
Well, let me outline the situation in which he said he would sell and paint the scenario of what the market conditions are going to be like in that moment. Because we've already gone through that with Saylor, right? Saylor was steadfast in saying we're not selling. Documented disclosures about the terms of his loans that were not recallable. And yet there was a seemingly concerted campaign to put out FUD about an impending margin call on MicroStrategy's loans, which were refuted. I mean, I posted the evidence against that, so did Michael Saylor. It was refuted in interviews, and it persisted through the depths of the bear market. When there's fear, no one is really wanting to listen to rational explanations when the market is dumping, right?
Mark also reflects on the FUD around MicroStrategy during the last bear market. Critics spread rumors of margin calls and liquidation thresholds, despite clear disclosures showing otherwise. This highlights how fear and misinformation can dominate during downturns. It's a reminder that markets are emotional. In times of panic, rational explanations often get ignored. Investors must learn to separate fact from noise.